This is Trade Journal episode 2, The Road to 1 Million. So I will try to keep this one short, nice and short, because I did ramble on a little bit in the last video. So we're just going to go ahead and do a recap real quick of the trades that I had yesterday going on. So as you guys can recall, I had bought two puts, expiration October 31st, strike price 490, that I had bought for 649. Had sold one contract for $101 profit at 4750, and I had left a one open. The next day came around, and actually before I say that, um, I left one open and I had sold a 486 put, the expiration of October 17. So market opened, and I saw that price had came down to yesterday's low, and I sold around for 89, a little maybe a little bit higher, somewhere between 49 and um, for 89.50, I believe it was. Actually, we can even look at the trade. So at 6:43 a.m. So price at 6:43. Yeah, it was somewhere around here. So somewhere between 488 86 and 48.12 is where I sold or I closed my contracts, both for profit. So I bought to close the put that I had sold, and I sold to close the put that I had bought. That was nice. I got a little lucky there. Um, Again, luck is not something I want to be relying on, but it is what it is. I am now in 51978 calls, expiration December 20th. It's a really high striking price. Again, this is QQQ. Four contracts, 591 premium each, bought at 9:31 a.m. So we can go back over to the chart over here, and now we can go through this trade. So what I like to do when I don't know the exact price level is I like to grab the high if it's a relatively tight candle. I like to grab the high of that candle. So here, actually, let me go to the 1 minute and be a little more precise here. So I like to grab the high of the candle for the entry, so that way I can give myself better risk to reward ratios. So the high of this candle was 490.32, so that's where I went ahead and I marked that level, and I set um, my stops and my take profit levels. So let's go ahead and go through the strategy and why I decided to enter um, calls. So if we look at the 5 minute chart, actually, so if we look at the whoop, give me a moment here. So if we go ahead and look here at the 5 minute chart, there was increasing volume on the previous candle that closed above the 10 period uh, simple moving average. And if you look at the chart pattern leading up to that point on the 5 minute and the 15 minute, you can see there is a symmetrical triangle. So price is consolidating and it is beginning to squeeze. So what I did was I waited for a direction confirmation. So my direction confirmation is the one side of the symmetrical candle with a with a close of that side of that um, of the SMA. So this was a bullish candle closing above the 10 simple moving average with rising volume. So the previous candle closed above the 10 period moving average, simple moving average, but there was no increasing volume until the next candle. So price did not even come back down and test the 10 SMA. It stayed above and held above the 10 SMA and then closed with increasing volume. So as soon as the next candle opened, I went ahead and I opened my contracts, I opened my position. So my price levels probably more around 489, 96, 95, somewhere around there. But again, like I said, I like to grab my my level of entry point at the highest point if it's calls, or the lowest point if it's puts, to give myself a better risk to reward ratio. So now here's the plan as well. Okay, I saw that on the daily chart here, that price was holding above the 10 period moving average. So I set my stop loss, the spread plus 1 cent of QQQ shares below the low. So the low was 487.57. Spread of QQQ shares when you buy shares is 20 cents. So I did subtracted 21 cents, and I set my stop loss at 487.36, and then I grabbed the difference between my entry point and the stop loss level, and I flipped it. So now my 1-to-1 would be 493.28, and my plan here is to close one contract at 493.28 and move my stop loss level to 490.32, maybe 490.31, or maybe even below this candle. I will decide later, but at worst case scenario, it will be 1 cent lower than 49.78 for that candle. I might even go to the 1 minute chart and make it even tighter than that. And then once I've taken profit on one contract, and the price has, or my stop loss has been moved up, my next take profit levels will be 494.76 and 496.24. So when it comes up to 494.76, depending on how the chart's looking and strength of bulls, I will either take profit or I will move my stop loss up again, somewhere near 491.56. And that's my plan. So I will not exactly be taking profit the entire time. When these levels are hit, or these alerts are hit, when these alerts are hit, what I like to do is I like to move my stop loss up. This is something that I've taken from Tom Hugard. A philosophy that has stuck with me for a while is um, something that he has taken and reversed. Something from what a lot of traders say. It said traders say you won't go broke taking a profit, and he says you something along, and don't quote me here, but something along the lines of you can go broke taking a profit if you don't let your winners run. So that's what I like to do. I don't like to define my take profit levels as much. When I'm in a swing trade like this, I like to move up my stop losses and let the trade go on its own. So also, since the four contracts have a small premium, when the price goes up, um, I am actually able to use a 15% trailing stop loss if I'd like. So I will also calculate if it's worth to just move up the stop loss, or if it's to move up the stop loss based off of levels, or if it's a good idea to move the stop loss up using a 15% trailing stop loss strategy. So that is something that is to be determined, but worst case scenario, this has defined risk no matter what. And I believe that is it for the trade. Oh, one more thing, as you can see, I have a credit spread here open. That can net me $17, and I'm risking 100 for it. This is just to minimize my downside risk. It's very minimal, which is why I almost didn't even go over it. But if these calls were a lot closer to the money, I would be not selling credit spreads. I would just be selling calls around a 20 delta with a 1, a 2, maybe even 3-day expiration, just so that way I can minimize that risk. But there you have it. Those are that has been my update to my previous trading video and my current trades. So thanks for watching.